welcome from my side. Ladies and gentlemen, I hope that you are not too hungry. And I was requested to keep my speech very, very short, that we can go for lunch. My name is Andreas Zanner. I'm a partner with CMS in Germany, in Frankfurt. I'm responsible for capital markets there, in particular for initial public offerings of securities. And I have divided the presentation a little bit in two parts. One is an overview about some facts about the recent developments in the EU area, in Europe, in the last years or in the last 2 quarters. And the second is a short case study of the IPO of Telefonica Germany, which we have advised a few months ago. We as CMS, we were the legal advisor of Telefonica in this IPO. You can find the presentation, by the way. We have a booth outside. If you give Patricia, she's here, if you give Patricia or me your business card, we can send you the presentation, of course, by email. So let's start with an overview about the European IPO activity in the last quarters. I think it's always the same with statistics. My opinion is the only statistic I believe in is the statistic which I have made on my own, since a statistic is always something you can argue and you can discuss. And here, this statistic, I think, is the only thing, or you see these 5 columns, and I think the only thing you can draw therefore from is that the climate is still very volatile. It's still a lot of uncertainty in the market, and that's why you can see the development here in these columns over the last quarters. Sometimes you have very high IPO activity and sometimes very low IPO activity. Same as here with the volatility compared with IPO proceeds. You see very different IPO proceeds. We will see that most of the IPO proceeds taken as a whole came from very large IPO transactions. Most of them are private equity backed. Here you can see an overview about the IPO volume and offering volume regarding the stock exchanges. You can see that the London Stock Exchange has just around about half of the overall proceeds raised, followed by Euronext with 18% and Deutsche Börse with around about 14%. You can also see Börse Istanbul with a few IPOs and with the volume there. The top 10 IPOs, what is very interesting is that the top 10 IPOs in the last quarters accounted for over 80% of proceeds. And 7 of these 10 IPOs were private equity backed. So many IPOs in this time are exit driven by private equity investors. Same on the next page. You can see the biggest IPO was the Belgian Postal Service. This was also PE driven, and if you can see from these 10 transactions, 7 out of these 10 exit driven by private equity investors. Let me briefly touch the IPO volume and value by sector. You can see that investment companies is what I mean here is investment companies, any company that offer financial services or financial products, and industrial goods and services raised nearly 2/3 of the IPO proceeds in the last 2 quarters, in quarter 1 and quarter 2 of 2013. The summary, I don't know what your opinion is. Are there a new wave? Are there new growth stories, or which sectors will perform best in the next month? I talked to a corporate finance advisor, Turkish corporate finance advisor yesterday, who told me in Turkey you see a lot of growth potential in the energy sector and also in the construction area. I don't know if you have an opinion on that. I would be very keen to hear it. From my point of view as a lawyer working in Germany, at the moment there is no clear trend regarding IPOs. There is no certain industry you can say this will be the next wave of initial public offerings in Europe. Most of the IPOs are PE-backed. That's true also for Germany. We have a lot of, or a few large IPOs, which were only exit-driven by private equity investors, not a certain industry. So I think there is no certain trend at the moment for specific industries which are most suitable for IPOs. My opinion is that the crucial issues are, when you want to go public, that you have a strong management team, that you have a proven track record with your services and products, and reliable figures, a strong financial performance over the last years. These are the decisive factors for me, and not a certain sector. So we can come now to a short summary of the case study. Telefonica IPO, I mentioned that a few minutes ago. We were in the Issuers Council in this very large IPO. Telefonica Germany in last October, November, they raised 1.5 billion euro at the German Stock Exchange in Frankfurt. Telefonica Germany was a subsidiary of Telefonica Spain, you know, the large telecommunication group from Spain. In Germany it has the brand O2, also in the UK it has the brand O2, and the German telecommunication provider was listed at 31st October of the last year. There are a few specific issues in this Telefonica case I would like to present to you. First of all, it was formerly Telefonica Germany was controlled 100% by Telefonica Spain, and now it comes to a spin-off or to a carve-out of this German entity, but nevertheless at the end Telefonica Spain via a UK entity still holds 70% of the shares in Telefonica Germany. So 30% of the shares were offered and placed to the public. Telefonica Spain, pre-IPO, a dividend was distributed to Telefonica Spain. This was not, is not usual regarding IPOs. Normally, before the IPO, it's a no-go to distribute dividends before the IPO to the sole shareholder. But in this case, for certain reasons, Telefonica Spain decided to do so. Before the IPO, a lot of entities were sold. We will see that in a moment. So we had a different group structure at the time of the IPO. What was very challenging was the time schedule. It was a very condensed time schedule. The kick-off meeting was mid or end of July, and as I said, 31st October, we had the listing. So we had 3 months to work on the prospectus and all the other corporate things which need to be dealt with before the IPO. Very interesting topic in this regard, the intercompany agreements. As you can imagine, there were a lot of intercompany agreements between Telefonica Germany and Telefonica Spain. By the way, the O2 brand was licensed by Telefonica Spain to Telefonica Germany. So Telefonica Germany didn't own the brand. It only has a license. On the other hand, a lot of financing agreements, cash pool arrangements, etc., which needed to be adapted to be suitable for IPO purposes. We had a very difficult stock option program before the IPO. The managers in Germany, they were paid according to an international payment schedule for managers of Telefonica Spain. This didn't comply with the German requirements. If you are a board member of a German legal entity, a German stock operation which is listed, you have to be paid according to German law and according to a German payment schedule. Your payment can't it's not possible to say you will be paid according to the results of a Spanish company if you are a board member in Germany, for example. The IPO dividend I mentioned, I'm not sure whether you can see the different structure. On the left hand, it was the Telefonica Group before the IPO, and on the right hand, it was the structure after the IPO. So a lot of carve-out issues needed to be solved before the IPO. Conversion, the Telefonica Germany entity was a GmbH before, or for going public, of course. It needed to be converted into a German stock corporation, which was also very critical in terms of the timeline of the IPO. But at the end, it would have been also possible to go with a, by the way, UK legal entity or Dutch company to the German stock market, of course, but at the end they decided to take the German stock corporation, even though the German stock corporation is, as you may know, a little bit complicated. We have this three-tier structure, shareholders meeting, management board and supervisory board, but they decided to list a German entity in the German market. Prospectus, a few words to the prospectus regime. As you may know, we have a harmonized EU prospectus regime, so if you have the so-called European or EU passport, so if you have an approved securities prospectus, you can offer your securities, your shares, all over Europe without limitation. So you can offer your shares in Italy, in Austria, and so on. Difficult issue were the consolidated financial statements, since they had to be prepared from the scratch. Before, there were no consolidated financial statements on the level of the entity in Germany. And also the extensive disclosure on related party transactions. As I mentioned, there were a lot of related party transactions between Telefonica Spain and Telefonica Germany, and all these agreements had to be described in detail in the securities prospectus. Thank you for your attention for the moment. If you have any questions, please do not hesitate.
What could be the prospects for non-EU countries to list in Frankfurt or other places, just like you have explained?
That's a very good and interesting question. We are currently advising one Turkish company, not for an IPO, but for an IBO, for a bond offering. Bond offering is something different. Here, when we are talking about equity transactions, normally we have advised many Chinese companies which are listed in Germany. And normally, from a German perspective, they say it's better to have a German legal entity to get listed. This would mean that you have to contribute all the shares in the Turkish company in a German new legal entity, in a German stock corporation. But this is not legally necessary, but the bankers often say it's much better to have a German entity if you want to attract European investors. You can also take a Dutch entity or another EU entity, but investors are more familiar with EU entities than with a Turkish entity legal form. Thank you very much.